In today's episode, we'll be taking a look at the core PCE data that came out from the United States and how it impacted markets, as well as what this sets up for us for next week, which is a monster week in markets. So in this video, let's do some prep for next week, taking a look at gold, the dollar and currency crosses, as well as stock market indices. Let's jump in. So first of all, here's a look at the tape. We have S&P 500 trading off of its lows, but giving back some gains post PCE number. NASDAQ, same thing, and Dow, same thing, by the way. And meanwhile, the dollar index sold off prior to it and then kind of went flat during the PCE number that came out. And here's a quick clip from today's live stream where we watched the event live. Okay, PCE numbers, no reaction just yet. Okay. There it goes, an initial push slightly to the upside for Euro, gold, S&P, NAS pulled back, dollar index was down. Now it's slightly poking higher. Let's see what we got. Gold pushing and then falling back down. Kind of a weird reaction so far. Let's see, do we actually... Okay, we got numbers as expected. Where does this leave us, guys? Okay, so we have numbers that came out as expected. So let me first of all say this. Most of the time, traders will say, well, Nick, there was no big spike. Remember, news is only as exciting as it is surprising. Think about the daily news. If you yourself, you don't turn on the daily news most days. Most of us do not, unless you're really bored. You don't watch the news every single day just for the sake of it. Really, the most people that will turn on the news is when something catastrophic happens, something really surprising, really big happens. Well, same thing with markets. What we just got was exactly what was forecasted. Core PCE came out at 0.2. It was forecasted to be 0.2. So the markets didn't freak out and react big to that. However, there's still opportunities here, okay? The euro dollar traded up and kind of fell back down during this. Same thing with the pound USD. The gold market is all over the place and the oil market continues to chug along, which is great for our position. We'll discuss more of my current positions and what I'm looking to trade later on in this video. Let's keep going. Before we get into this video, let me just say that if you're somebody who watches my content regularly and you're familiar with the Edge Finder, which is our market scanning software that you regularly see using in this video to take a look at different market data and indicators, we currently are doing a flash sale event. Currently, you can get 45% off if you use the first link in the description to send our team a direct message. All you have to do is click the very first link in the description and click this Edge Finder 45% off flash sale before it goes away. It is today only, and I just want to be transparent about this. We are adding so many different features to our tool and do plan on repricing and structuring our software a little bit different. This gets you an opportunity to pay one time to get access to all of the features that we're adding without having to pay the higher prices that are coming. So this is your chance. I'm trying to be transparent about this. Yes, it is a sales pitch, but honestly, if you wait, the price will be a lot higher. So if you've been thinking about getting it, click that link and let's get you a copy today before next week's huge week of NFP, PMI, and so much more data. And here's a quick look at the data. We had core PCE price index come out at 0.2% compared to the forecast of 0.2%. This would explain why the chart was kind of messy. If you were watching it during this time, we saw everything kind of spike in both directions. It was because the number didn't really surprise markets too much. So the question now for markets is, where does this number leave us? If the number was not too hot or too cold, what does it say about markets going forward? Well, let's kind of pull back and look at things from a summarized view. And Chandler, maybe you could help us with a little bit of notes here. So the first thing we have to understand is that recently we saw some strong economic data out of the US and actually the UK. And I'm going to point specifically to strong PMI numbers for the US and for the UK. After that, we also have strong advanced GDP numbers out of the United States, which show that the economy grew more than people were thinking. And at the same time, we also had retail sales numbers that came out really strong. Now, you could point to some lackluster numbers like the durable goods orders that came out. That was kind of a strike against the US economy, the US dollar. But overall, if you kind of take it as a collective, we've seen some strong economic data. So why is that going to move markets? Well, let's take a look at the dollar index. The dollar index, I would say, has parred any sort of losses each time it's come down. So we've stayed in this range, and it would suggest to me that the market is really looking for forward to NFP to get us a clearer look at the labor market. Is the labor market still very strong? If so, we very well could see the dollar rally, potentially even break out through the highs. And if the labor market starts to crack or cool, which I think is lesser likely, we could see price break to the downside. But will be very interesting to watch out for that this week. We got a pretty range-bound dollar index for the last several days. And going forward, what I'm looking for is a signal by means of a breakout one way or the other, likely which would come through market data giving us a signal, right? So we'll look out for that. But for me, I am still tentatively, cautiously dollar bullish for the reasonings that I showed earlier, that strong economic data. And that strong economic data also has me still bullish on oil. I'll show you guys my position. You can see I'm looking at USO, which is the US oil market. And what we can see here is that price is still rallying for my entry point. I shared this signal inside of our VIP group, which you can see here where I shared the entry, the details, why I'm taking the trade. I even trailed my stop a little bit. So we're running hot on this move, and it's been a really good trade so far. We'll continue to watch this oil move to see if we can get more out of it. And if I trail stops, members, you guys will see it inside of the Discord. Chandler, I'm wondering, how am I still sick? It's been like 6 years since I first got sick. Here is the current positions that I'm in. So what we have here is we have, there's that US oil position still floating in profit pretty good. At the same time, we've got a nice position running on XLE now. This is the energy ETF, which has stocks and companies like ExxonMobil, Chevron, things like that. So that trade is now in profit based on, again, probably the rise in energy prices, notably US oil. My tech ETF put that I sold is really in the green right now, and my China ETF is slightly moving against me, down $600 on that trade. If you're wondering which brokerage I'm using to place these trades, both on options and ETFs, I use WeBull out of the United States, and there will be a link down below in the description. If you're not from the US and you're looking to trade stocks, indices, commodities, currencies, etc., I recommend Eightcap, and if you use the link down below in the description, there's some really cool sign-up perks, so check those out. So here's a quick look at my positions. I want to show you both the good, the bad, and the ugly. I am still long China ETF, FXI. This is kind of a unique play that I don't usually do, but this is a longer term position for me. We're trading at 2007 levels on the Chinese stock market, and part of the reason that I am picking up a very small position overall here is simply because the Chinese government seems to really dislike the fact that their stock market has gotten so crushed. Meanwhile, places like Japan, if you take a look at like the Nikkei, right? Look at the Nikkei flying high. And, you could look at other stock markets like the India stock market. They're doing really, really well. I think China doesn't like that, and they've actually lessened their grip, I guess, on some of their own companies. And I think that actually could create an environment where China starts to have a little bit of a rebound, which also could help my oil trade. And again, why? Well, it's because, China is like the #1 consumer of Brent crude oil. So it's worth mentioning that if China does have some strength come back into it, we could see oil price break out. I'm going to continue to watch that close. And here's a look at today's top setups. We can still see oil is on the list, but at the same time, we have several currency pairs: pound New Zealand, euro New Zealand, pound Aussie, euro Aussie. And noticeably, it seems like the Edge Finder is very bearish and has been pretty bearish on these, on the NZD and AUD currency pairs, for those of you guys who watch those. And again, you can see that reflected in the most bearish readings also being Kiwi Swiss, Aussie Swiss, Kiwi dollar, Kiwi yen, and Aussie dollar. So kind of interesting to see that. And here's something cool we just added to the Edge Finder. This is actually bank forecasts by symbol. This is really cool. So you can actually select any different chart that you'd like from this list. It is currently built specifically for gold and currency pairs. But what we can see here is we can select things like gold, and we get a summarized view of bank research teams and what their forecasts respectively are for different assets. So you can see, for example, CityFX has a monthly target on gold of 1965. That's their research team putting that out. And they also have a quarterly target of 2029 an ounce. Thought this was really cool. So what we did is we made it so that you can see all the different reporting banks, and at the same time, we have the monthly average of those as well as the quarterly average. I'm really excited about this new feature, and I want to ask you guys real quick to give me some feedback in the comment section below. If you think this is potentially a cool indicator, or you could see yourself using it, do me a favor, type the word cool in the comment section below. I'd like to, when I build these new features, or when I say I meant when our team builds these new features, I like to get, a sense or a pulse read from you guys. Is this actually helpful in my videos? So if I see a ton of comments of people saying cool, then maybe I'll incorporate this more often in my videos. And for those guys who are Edge Finder users, just head over to Bank Forecast and play around with it yourself. You can select any chart that you would like. And remember, we're doing our flash sale today, so don't miss out on the 45% off link at the very top of the description. Gold remains a really frustrating story, to be completely honest. I cover this thing every single day, and overall, it's just been so choppy recently. It's something that I actually love to trade myself, and I have kind of a bearish lean right now because of my dollar bullish idea, but it's just not moving clean at all. Like, this is not really a market where I see, a clean setup. Even though, yes, we're trading at resistance, the bigger picture is still very choppy and range bound. I'd like to see this thing really start to trend. If you scroll out on gold, there are periods of times where you get these kind of nice one directional trends. And I absolutely love trading gold during these periods. But what we've seen recently is just a really quiet range bound market. And again, I pointed to this earlier in the video, but next week with NFP, I expect that this actually could change and we could possibly start to see a breakout, whether it be up or down, but we'll be covering that on the channel as we get closer. And it's not just gold that's choppy. You can see here's the euro, here's the pound, here's the dollar yen. A lot of markets kind of went sideways this week as there just wasn't a lot of follow-through moves based on the economic data that we got. Same thing with the Australian dollar and Kiwi dollar for that matter. Both of these are still very range bound and actually really good candidates, I think, for breakouts. I prefer the downside. If we can see a break through the lows, I'll be watching that really close. It should be interesting to see if we can get that next week. And it still seems like expectations for March are for slight lean towards interest rate holds at current levels. Based on all the strong economic data, if we continue to see it roll in like that, this I think actually could increase further, which could strengthen the bull case for the dollar and perhaps cause indices to pull back a little bit. At least that's what I'm thinking. We'll see as things play out. We'll get a lot of data next week, which will either confirm my theory here or completely deny it. And as a trader, I'm very quick to try and react, not try and predict everything. So if we do continue to see this become the case where this number increases, I'll probably stay dollar bullish. If this thing gets wiped away, we see some real cooling in the economic reads, we might change. But for now, I'm going to lean more towards dollar bullishness until proven guilty. And with that said, guys, I do want to just say next week is such a big week. We have so much data coming out. If you're not already, make sure to subscribe to the channel. That way YouTube will start pushing these videos to you so that you can check them out when they drop to help you stay on top of whatever the market data is currently when it comes to all this stuff. I know it moves fast, but we'll continue to monitor that. You can also join our Telegram channel, which is totally free to do so. There will be a link down below in the description. We post charts, ideas, research throughout the week. Myself and Frank and Julie, we do a lot of work in there to keep you guys up to date. So check that out using the link down below. Thank you and have a great weekend. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.